Is the US dollar at risk of collapse? Let's talk about it. During the COVID lockdowns, the US was dropping all these stimulus bombs. The money printer go burr, right? And during that time period, everyone was saying, oh, the dollar's gonna collapse. It's gonna be awful. There's just too much money printing. But actually what played out was that globally, everyone was printing money. And so it all kind of balanced out. But remember, the big thing to remember about global macroeconomics is that the US participates in 87% of all global trade. That means everyone wants dollars, both to participate in trade and finance their debts. As the value of the dollar rises, it causes a rapid race from other countries to collect more dollars. And this continues to get more and more panicked as the value rises. This theory is called the Dollar Milkshake Theory. And you heard me talk about this in 2021. It's an early warning signal. Hey, this could come up. Be aware of this potentiality. But it looks like it's kind of starting to play out. If you look at this DXY graph here, which is US dollar futures, we can see that in 2021, when there was a bunch of money printing, that we hit those lows, right? Lots of stimulus, we're deflating the value of the dollar, depreciation. But you can see today, the dollar is rapidly climbing. And this gives the potential for it becoming a wrecking ball on markets. And it's not the first time we've seen this either. In 1985, we had the Plaza Accord, which was a manipulation in exchange markets to help Germany and Japan with their markets. They're having tons of issues after World War II. And we said, hey, you know what? We'll mark the US dollar to your currencies to help you out with trade. And then you can stimulate your economies, and that way you'll get some aid. But let's take a moment to actually break that down. It took 5 years to actually play out. It's from 1980 to 1985. And the US dollar actually rose in value by 47.9% over those 5 years. And that is what led to the actual Plaza Accord agreement. And what happened afterwards wasn't actually so favorable for the US. Of course, we're depreciating our own currency. That kind of sucks. But it also incentivized countries to gain new trading partners, which led to Japan, for example, expanding its trade with Eastern Asia. And after that accord was put in place, the US dollar shrunk by almost 25% in 2 years before another accord was struck to stop it. Okay, be honest with me here. When's the last time you actually planned out your spending, your finances, or planned for your retirement, or how to preserve the wealth you already have? Listen, you need to call Rob Reed. There's no one better. Learn about different insurance vehicles, annuities, or different investment strategies to help you create or preserve your wealth. It's for your success. You know you need to get it done. I know you've been pushing it off. Life insurance, ugh, who wants to talk about that? But honestly, learning about index-based life insurance, which is basically like a rich man's Roth IRA and allows me to be my own bank, was huge. So if you want to learn more, call the number above or visit cwrpcg.com. So let's take a moment and think about the exchange markets today. The US dollar has just surpassed the euro for the first time in 20 years. The Japanese yen is doing terribly, 5-year lows, still struggling, and lots of voices are saying that the Chinese yuan is next. And on another front, we're seeing lots of other countries like Russia separate themselves from dependence on the US dollar. And that's also occurring in the Middle East with some conversations in other parts of Asia. You can kind of see how history isn't exactly repeating itself, but it does have a certain sort of rhyme to it. The rising US dollar has also blown up some emerging markets like Sri Lanka, leading to pretty much a collapse in the government due to riots and the president even having to flee the country. And it wouldn't be surprising to see more turmoil like that on the way. Now for the US, everything's great and peachy. The rising dollar means imports are easier for us, making trade favorable. However, everyone else is suffering the repercussions. And I know you might be thinking, well, not all of those have just to do with the US dollar. And you're right, but at the end of the day, it's the same outcome. If you need US dollars, you're gonna get crushed and you're probably gonna wanna find new trading partners. But you also have to remember, it takes quite a bit of time to get from point A to point B, to make those new trade agreements and to get off dependence off the US dollar. And during that time period, this becomes the milkshake theory by being inevitable. Everyone's clinging to get more dollars. As the price rises, everyone starts panicking even more to get more dollars. And that leads to pretty much a financial collapse globally. Because remember, we're participating in 87% of all trade that happens in US dollars. Even when we're not trading with someone. If China is trading with Australia, they need to pay US dollars to get steel. It's just what's used. And if you're an investor in this environment, even if you're just a passive investor, you need to understand how these investment vehicles work for passive investing. If you're in a growth investment account, usually you have about 60% domestic stocks and 30% of emerging market stocks. Now, let's say those emerging markets get crushed and that drops to a 15% allocation. And then your US stocks are then greater than the 60%. At 75%. Well, it's going to sell US stocks and then buy up the emerging market stocks, which means that it's going to bring down the US markets. And remember, passive investing is still a sizable amount of the stock market. And back on the macroeconomic front, if people start to look for new trading partners, it's going to be an issue for us. I know lots of people like to go on and on about US debt. We have over $28 trillion of debt. But the global debt's over 300 trillion. So proportional to the rest of the globe, we're actually not doing so bad considering that we participate in 87% of all trade. We're 25% of the global economy. So proportionally, we're not doing that bad. And it's not that bad, especially when we're the dominant currency. However, if we're no longer the dominant currency and we don't participate in a lot of trade, remember, we're mostly an import country. We get a lot of the goods we need. If people don't trade with us, we don't really make a lot anymore on our own. And that could rapidly become a major issue, especially when we have pretty questionable US leadership. We don't utilize some of our greatest advantages, like our huge natural reserves. We won't even be a self-sufficient country, even though we have the capability to do so. And I know lots of people could have different opinions on that when it comes to ESG guidelines, but it's the case that we're dealing with now, and it doesn't look like it's going to change until maybe we get a next round of elections. So all in all, this looks like we're setting up for a rough few years, maybe up to 5 years of suckiness. But I'm bullish. I'm a perma bull. I've always been a perma bull. I know I've been bearish and posted bearish things on the social medias, but down deep underneath all that worry and anxiety is a perma bull, and he's excited. We have crypto coming up, new innovations, different ways to get out of the dollar system. If you wanted a bull case for Bitcoin, boom, there it is. There's no better bull case for things like cryptocurrencies. So they're being delivered to you on a silver platter. So even though I think it'll be a rough next few years, I think 10 years from now, we'll come out okay. We'll elect the leaders we need. People will step up. And even though we aren't an absolute moral authority, I still think that we'll do enough to get by, and that at the end of the day, we'll do the right thing. Hopefully. And remember, even though this all is playing out right now, it's not inevitable yet. It's just a potentiality that's grown to the extent that I thought I should do a personalized video for it. So I hope you enjoyed this episode, special report, whatever you want to call it. But remember, if you want to participate in more conversations like this, you want to keep up with markets, you want to see what I'm trading, click the link down below and join the Discord, and maybe subscribe, like the video, leave a comment. It helps the algorithm, and then I'll produce even more content. So I'll see you on the next one.